Welcome everyone to today's interview. We are thrilled to have the Degengami from HydraDX with us to discuss their innovative projects. As we dive into the world of DEX and the Polkadot ecosystem, we'll explore the unique features, challenges, and aspirations behind the HydraDX. Get ready for the insightful and engaging conversation about the future of blockchain and crypto trading. Let's get started. Firstly, can you give us a brief introduction of yourself and your project?
Yeah, sure. So my Twitter name is Degengami. So I'm currently part of the marketing and communications team here at HydraDX. My previous background was actually in traditional finance, which I've worked for over 7 years, mostly on the banking and financing side. So yeah, I've joined HydraDX just over a year now. And to give a quick introduction of HydraDX and what we're about. So HydraDX is a decentralized trading platform and liquidity protocol, which is native to the Polkadot ecosystem. Our first flagship product is the Omnipool Automated Market Maker, AMM, which offers basically the ability for projects within the ecosystem and users within the ecosystem to trade with the lowest slippage, dollar for dollar, based on the total value locked within the DEX for traders, and offering also the most flexibility for people that are looking to deploy their capital as liquidity providers.
Yeah.
And yep.
Okay. And since we already entered the second quarter of 2023, and can you share with our audience the most prominent and influential achievement or innovations of HydraDX this year, as well as their impact on the Polkadot ecosystem?
Yep, for sure. So as some of you guys might be aware, for us, after winning our parachain slot, in 2022, we actually launched our flagship product this year at the start of January, where we launched the Omnipool AMM, as I briefly mentioned before. So, how we think about, HydraDX and our impact within the Polkadot ecosystem is the fact that prior to, I would say, us launching a native DEX on Polkadot, there wasn't a DEX within the ecosystem that fully leverages and utilizes the advantages that a specific parachain can bring to the table. So for us, we see how we can help the ecosystem is basically by enabling a set of features which is unique and probably not as easy to replicate on DEXs in other ecosystems. So for example, in addition to our native Omnipool AMM model, we have also recently launched a feature called OTC, which is over-the-counter trading, which allows users to set up specific bids and sells based on the preferred amounts. So this is a unique feature that I don't think other DEXs have had, even in Ethereum, that often. And then for some of the other features that we'll be rolling out would be dynamic fees, which is basically allowing, based on the volatility of the markets, the protocol fee that gets generated and earned from the traders is adjusted. In addition to that, we'll also be rolling out dollar cost averaging, which allows more passive users that want to accumulate a certain token to set and forget and basically not have to be on top of the market monitoring it 24/7. So these are some of the features that we'll be rolling out during this year. And as for I think also an interesting impact to the ecosystem that I think we can probably dive into later is the fact that I think our most unique offering is the fact that we allow not just I would say liquidity providers, but also project treasuries to have the ability to stake and provide liquidity with a single token, and this will unlock a lot of capital efficiency for parachains and teams in terms of having liquidity for their own token to trade. And I think we can dive into that a little bit later.
Yeah, you've mentioned the OTC, so that's bring me to have to ask you the question about the compliance. So how do you deal with the compliance issues?
Yeah, so I think the idea of the OTC feature was the fact that, this is actually a problem that we face internally. Like for our product and our project, we had something known as protocol owned liquidity, which is basically the project itself has, a set of assets that it wants to provide liquidity for, right? But the problem is if we were to exchange this set of tokens or assets for any other tokens, we would have to go through a centralized exchange. And this is where lies in the issue of having a centralized party being involved in transacting and fulfilling orders. So what we did was we built this OTC feature to allow for a way for users to obtain in a trustless and decentralized manner any token that they would prefer. And as such, so to give an example, what we did for our end was the fact that we had, $2.5 million worth of DAI that we were looking to transfer into USDT native for Polkadot as well as IBTC. So instead of going through a centralized exchange, such as a Binance or whatnot, we created this OTC feature that allowed users within the community to fill this order for us and actually make this transfer such that there's no centralized party that is determining what price that this order gets filled, but it's done openly and publicly.
Okay, great. Since you already mentioned a little bit that what you've done, and I think the audience already get a context of that what is HydraDX is and what you are capable of. So in this part, could you tell us about what makes HydraDX stand out? So please share its benefits with our audience so they can better understand how HydraDX is different from other DEXs in Polkadot ecosystem.
Yeah, for sure. So I think, as I mentioned briefly, our most unique feature is the ability for any liquidity provider to provide, liquidity with one single token. So this is known as single-sided LP or single-sided staking.
Mm-hmm.
And this is the main difference between HydraDX and other DEXs because of the fact that if you think about it, so right now, for a lot of projects and teams, within their project treasuries, the most amount of tokens that they have is their own native token, right? So for example, Akala has the most amount of Akala tokens, or Centrifuge has the most CFG, right? So right now, in the current situation, what typically happens is they have to either provide these tokens to market makers on centralized exchange, or if they were to launch on a DEX, they would have to provide a 50-50 weighted liquidity pool where they have to see probably 50% of the value in, let's say, CFG for Centrifuge, and probably 50% in DOT, right? And this is highly capital inefficient because of the fact that, for a newer project, they might not have the equivalent amount of DOT to allocate for this budget, right? And what typically happens is they rely on liquidity, what is known as liquidity mining in decentralized finance, DeFi. And this is where they incentivize with high rewards, token rewards for community members to provide liquidity on their behalf for people to have good slippage to trade with, right? However, again, because of the fact that liquidity mining requires a pretty high budget to incentivize and attract people to provide this liquidity, the project itself also loses out because of the fact that this budget could have been used to be spent on something better, right? So our solution is the fact that by allowing project treasuries to provide their own native token through just depositing, let's just say the CFG for Century example, they get immediate benefits of all other tokens that are already in the Omnipool and get access to that liquidity from day one. So as a result, the main advantages are no additional capital needed. Second, they can reduce the amount of budget allocated towards liquidity mining and growth, such that they can focus redistributing those tokens for better use cases to incentivize actual activity for their product. And as I mentioned, so right now within HydraDX's own liquidity pool, we already have over $10 million worth of liquidity that is within the pool that they have access from day one. So this allows them to have a baseline of level of liquidity, no matter whether they've listed before on some exchange or not. they get that from day one. And as a result, I think one last benefit of the fact that they're deploying on us is the fact that compared to relying on market makers or community to provide the liquidity, they also earn the trading fees from the tokens that they provide within to the Omni pool. And as such, they can actually accrue all these trading fees such that they can be utilized for other purposes within their project.
Yeah, single-side liquidity is a great innovation. And what are the drawbacks or potential risks associated with using our LRNA as the hub currency for HydraDX? And so what measures does the team have in place to address them? And if the token price were to fall sharply, could it trigger a large-scale sell-off, draining all liquidity pools and potentially leading to the collapse of the entire DEX?
Yeah. So this was actually one of the key issues that our team were looking to solve or mitigate because of the fact that, so to give some background, there has actually been another project within the Ethereum ecosystem that has launched a similar model as us. And during the 2022, when a lot of tokens prices were collapsing, what ended up happening in their model was the fact that, exactly as you said, it led to a significant decrease in terms of liquidity overall, and the token price of that project dropped dramatically. So for us, in addition to already identifying the issues related to that before that happened, as well as observing what happened to them, we came up with this, a number of different types of mitigations to prevent that from happening. So first of all, as you mentioned, so Lerna is the hub token that connects all the different tokens within the HydraDX Omnipool. So in order to make sure that this value of Lerna is maintained in a stable range, what we do is for each transaction that gets transacted in the HydraDX AMM, a portion of those fees that are earned from these swaps will actually be used to burn extra Lerna that potentially might have come up from the fact that tokens go in and out of the pool. So by reducing the amount of tokens that are within the pool for Lerna, this basically ensures that if a lot of people are selling Lerna into the pool, there's a cushion or something to counteract that selling pressure to make sure that over the longer term, the price doesn't become too volatile. So that's number one. So second of all is the fact that we'll be having a different feature I previously mentioned called dynamic fees. So as I'm in volatile times when the market is going up and down significantly, this is when liquidity providers lose the most because of the fact that the price changes dramatically, right? So as a result, right now in current versions of, let's just say Uniswap on Ethereum, these fees are static in the sense that you earn the same fee amount, regardless if prices are going up and down 10%, or if it's going up and down 1%. But as we know, if you're providing liquidity or if you're taking the opposite side of a trade when the markets are going down dramatically, you should get compensated more for that. So as a result, through this dynamic fee mechanism, you're able to counteract some of this sell pressure, as well as counteract some of this selling by making sure that the protocol earns enough to justify providing this liquidity. And this feeds back into the first point of the protocol. Some part of the fee is used to burn Lerna. So if you can imagine, if the project is if the market is seeing high volatility, more fees are earned. So more proportion of that fee is also used to burn Lerna, which also, as I mentioned, was to counteract the sell pressure of potentially Lerna in a market volatile situation. So these are the first two in terms of fees. So third point is the fact that we have what we call protocol owned liquidity. So this is where HydraDX as a protocol actually owns its own liquidity within the DEX. So as a result, this liquidity is always going to be around, regardless of market situation. Because what we've seen exactly from other ecosystems, DeFi projects, was the fact that in highly volatile times or when the market is going down continuously, a lot of these liquidity providers pull out the liquidity, right? And by pulling up more liquidity, this results into worse prices for people to trade it. So by having this protocol own liquidity within the protocol, this makes sure that for any point in time, there's always a baseline level of liquidity that the user can trade with, such that even in a deteriorating market environment, there is execution, and the execution is I would say, decent slippage. And last of all, so the last point to counteract and make sure that Lerna does not see this downward spiral or massive sell-off is the fact that right now at this point in time, we have liquidity restrictions where basically Lerna is not available to be purchased directly from the protocol itself. It is only compensated when certain liquidity providers face impermanent loss. So this also makes sure that the supply cannot be accumulated by a bad actor, such that they can dump it all at once into the liquidity pool and dramatically affect the price. So these are, I would say, the initial measures that we have in place. Of course, we're always continuing to research and develop new features to make sure that there are further factors that can make sure that the price of Lerna is within a stable range.
Yes, I think that builders like you guys put a lot of efforts to, solving the pain point of the DEXs. But as a normal user, so which get to me to ask about this question, that is, in your view, what do users value most when trading? I ask because for me, the top priority when I was using a DEX is buying the token I want, and followed by low fees and a user-friendly experience. However, I've noticed that a major challenge for DEXs in Polkadot ecosystem is that there's a shortage of Polkadot of popular tokens. Do you think this might make it difficult to attract users?
Yeah, so I would say, I definitely agree because, having been a DeFi user myself in other ecosystems, as well as seeing what's available currently in the Polkadot ecosystem, I would definitely say that for any new DEX in a younger ecosystem like Polkadot, this is key, right? How do we make sure that we have the tokens that people want to trade? And I think, as such, right now our current main priority is to onboard, I would say, with the focus on onboarding the top parachains within the ecosystem as our main priority, because we already have BTC, we have ETH, and we have some stable, the popular stable coins, so USDT and DAI in the ecosystem already. For us, that next wave is bringing, the centrifuges, the Astars, the Bifrost, which we're all in discussion with. So, for example, right now, Centrifuge is already entering their governance stage in terms of discussion on putting their tokens with their treasury tokens within our DEX. So this is an ongoing discussion. Similar conversations are about to be had with projects such as Astar and Bifrost. And in addition to that, we're also opening channels with Moonbeam. So we definitely see this as one of the key priorities. I would say, in addition to having these popular tokens that you mentioned, I think another part is also facilitating and allowing users to acquire tokens that might not be available on decentralized exchanges. Like, for example, I still remember when I was first entering into DeFi and transacting, the reason why I used Uniswap was the fact that I was able to buy some other token that was not listed on any exchange yet. And this was the best way for me to get access to it, right? So we also see that as one of the key priorities, is that listing tokens that are not as well, I would say, widely available, that people are interested in. So one of these key tokens that we recently onboarded was Zeitgeist. So Zeitgeist is one of the parachains within Polkadot, and we are actually the first DEX listing, compared to some of the other centralized exchanges that they have, which may not have the sufficient amount of liquidity that we might have. And I would say, in addition to that, is also, for example, we've also explored in terms of liquid staking tokens. So these are similar. You can imagine, like, for Bifrost, right? They're launching VDOT, which is a liquid staking version of Polkadot token that allows people to accrue yield. So at this time, right now, the centralized exchanges don't offer these tokens to be traded, right? And why I would imagine some users might be interested in these tokens would be the fact that you're earning yield on top of this token, and this is comparatively way better than putting it on a centralized exchange, and potentially you might not get it back, right? So you're earning yield by just passively holding it with on chain. So I think that's also an interesting use case that we're exploring, and definitely trying to onboard as well.
Yeah, as you mentioned, the governance. So regarding the HydraDX governance, how does your team maintain a balance between community engagement and the demands for project development? So in your opinion, what should be the ideal governance model of a decentralized exchange look like?
Yeah. So I guess for us, this is a key priority, and one of our top priorities to actually discuss and walk through, the major ideas that we have with the community, right? Because end of the day, I think right now there's still a lot of fine tuning of this approach because of the fact that there's a trade-off in terms of executing quick, but also taking a very centralized approach, which might not yield the best results. Because we also believe that having a very strong core community that gives us direct feedback in terms of what is working and what is not, and adjusting to those needs is key. Because end of the day, the first set of users that that's interacting with your app is your power user, right? And they have played with it for a lot, and played in a long time, right? So I think this is what's unique about Web3 in the sense that we get this direct feedback, and we should definitely incorporate it and allow them to have a voice. So for us, the idea is to continually decentralize the contributions that are made to the protocol, such that the current core contributing team is not the only team for or the only source of inspiration within the protocol. So for now, at this point, that's what we've been doing, and we've been rolling this out based on the proposals that we have. So most recently we got a governance approval for the allocation of a $5 million budget for over 2 years, where basically any builder that is interested in building on top of HydraDX or providing further features in terms of the main product that we have, they're more than welcome to set up a proposal and get access to those funds to help build with us, because we're only one of the teams. And I think that is also one of the key powers of Web3 in the sense that, if we're only relying on one team to build out the product, we're never going to beat out the centralized, providers, because of the fact that, they'll always be able to execute faster. But the problem is, I think the diversity of ideas and uniqueness is what is the long-term advantage of having such a, decentralized and open governance approach.
Yes, and throughout the entire development process of and the project progression, which aspect did you find most challenging? Was it technical implementation, market promotion, ecosystem constraints, or something else?
Yeah. So I would say so far, because the Polkadot ecosystem is still relatively new, there's a lot of new learnings that our team has to do as a whole, whether that is rolling out a new palette or integrating with a new chain or maintaining set of collators, right? Or even, the parachain options itself, right? Because if you think about it, right, I think parachains really only started talking to each other through HRMP since last year. So, if you think about that, right, our ecosystem as a whole really only started to take shape for applications to be built in a way that connects with each other just 1 year ago. So I think this is good and bad, because of the fact that if everything was already figured out, like on EVM chains, right, we will have 10x the number of competitors with rolling out a copycat product every single day of the week, right? That's the good side, where there's less competition. Of course, the downside is it definitely takes a lot more time to make sure that the technical development is sound and we're making the right decisions, because everything's always a first time, right? And for the first time, you always want to make sure that everything is slightly slower, but at the same time, security is a lot more higher of a priority, because as we've seen with a lot of these different DeFi projects and protocols, being hacked, is a one-way street to not recovering. So I think that is the key focus for us, to make sure that security is top of mind, and slow and steady at this point in time.
Yeah. And for the next question, I want to ask a basic question that is, to let our audience have a basic idea of omni trading. So when did the concept of omni trading for tokens first come up? So why did it happen? Why didn't it happen earlier, or what has changed now to make it possible?
Yeah, so I will give a brief background on the whole project's founding, right? So this actually began as a brainstorming session between members within a VC called C Prime Capital, where one of our founding partners was from C Prime, and from talking about it and ideating about what should an ideal liquidity layer for crypto look like. This is where they came up with the idea of this hub and spoke model where everything connects through one token. And as a result, through these continual discussions, our founder Jakub found another co-founder that is technical in nature, also called Jakub. And basically they became, they joined forces in 2020, and that's how we came to be. And specifically on the point of the hub and spoke model, right? So if you think about it, right now, if you think about Uniswap, especially V3 and a lot of these other AMMs, they've been migrating to more of similar to an order book model, which is what you see on centralized exchanges already. However, I think if you think about it, right, for centralized exchanges, the reason why closed limit order books work very well is because of the fact that it's centralized and because of that, the latency in terms of how trades are billed and all that stuff gets reduced significantly. So how we personally see it within the team is that you probably never match the latency in terms of trading on a centralized exchange on a decentralized AMM model, right? So where we are thinking about and how we're thinking about it is the fact that if that is probably the predominant case, what is a different model similar to taking a step further from the Uni V2 model of the XYK formula model and how that might look, right? So we're imagining a different side of the universe where, yes, I think for all the major assets, probably trading on a central limit order book makes most sense because of the fact that for these most popular tokens, you have high liquidity and high demand already, right? But then for other tokens and other projects, which is especially earlier in their life cycle, they might not have that demand or have the ability to generate that liquidity and interest, right? So how can they get funded, or how can they bootstrap their own liquidity, right? And I think that's what the main use case for an AMM is, right? So in our sister chain on Kusama, Basilisk, we have a feature which is called LBP, the liquidity bootstrapping pool. And what this allows is basically for any infant project to generate a initial amount of funds from listing the token with no upfront dollars invested. So I think this is a very unique proposition because of the fact that from this you can generate your first set of capital, and then eventually you can migrate towards the HydraDX Omni pool, where basically from day one, like I mentioned, you gain access to $10 million of your liquidity on all these other different tokens that you would not necessarily get unless you're a very popular project right off the bat, right? And I think that's the main, I would say, advantage of a decentralized exchange, which is providing this liquidity to these projects that are probably not as in demand initially. And then eventually, yes, of course, if they continue to grow on in popularity, they'll be listed in a number of different places. But I think that is what I think is probably the main use case for the decentralized model.
Yeah, and so as we wrap up our interview, could you kindly share your goals for your parachain project and the promising features of entire ecosystem? that you are excited about?
Yeah, so I think for us, the first target is definitely to become the connector of all parachains in terms of liquidity, because again, I think that is the missing ingredient right now to allow a lot of these more interesting DeFi use cases to happen. Because right now, parachains talking to each other is still very limited, right, in terms of the ability to go from one to the other. So I think this will foster the ability for people to within the ecosystem to think about these types of products that they can leverage our liquidity hub that we've built. And tap into it in terms of building a new set of products. And then for the ecosystem as a whole, I think we're very excited about as I mentioned, the further connectivity and leveraging the ability of what XCM can do, and seeing what kind of new user experiences can be created when all these applications are talking to each other and connected on the different parachains. And I think that is where will probably be the next wave of, probably interesting ideas that will come out of the Polkadot ecosystem.
Yeah, and thank you so much for joining us today and sharing your valuable insights on HydraDX and the Polkadot ecosystem. We truly appreciate your time and expertise. And to audience, we hope this conversation have given you a better understanding of the project and its potential impact on the world of decentralized exchanges. And stay tuned for more exciting interviews and discussions. And as always, keep exploring the ever-evolving world of blockchain and cryptocurrency. Until next time, and take care and happy trading.